Good morning. Thank you, data ladies, for making data fun today. We're going to try to make supply chain fun as well. So our Sweet Cheeks Diaper Bank transformation project was focused on cross-docking opportunities and supply chain revenue based on their newly acquired warehouse. The new warehouse is located in a prime location off Interstate 71 and has thousands of square feet underutilized with 5 to 6 dock spaces and can be separated from the rest of the building. So this provides a major opportunity for additional revenue. Our team consists of game changers with a wide array of experience that was leveraged to execute the deliverables requested by Sweet Cheeks. We had a team of professionals with expertise in financial planning, warehousing, quality assurance, supply chain, entrepreneurship, and management. So together, we accomplished the following project objectives. We provided an informational guide of the basics of cross-docking, which included standard rates, demand in the area, scheduling and staff requirements, third-party management opportunities, contract agreements, insurance considerations, and industry best practices. We also provided enough information to create standard operating procedures on cross-docking. So this was a huge lift because we're basically standing up a business within the nonprofit organization. So what is cross-docking? So cross-docking is the logistical process of transferring goods from one supplier to multiple customers in the most efficient way. And this all happens usually within a 24-hour time span. So as this process flow shows, the supplier produces the product in mass quantities, delivers it to the cross-dock, and the cross-dock sorts and prepares the orders for different distributions. After that, it's shipped to different customers using different trucks. So cross-docking reduces storage costs, transportation costs, capital investment holding the inventory, and speeds up the distribution process. This industry is booming. These headlines were all generated just within the last 6 months. Businesses need the support and space to enable the flow of their goods. So there's a very promising future for cross-docking demand. We provided a standard rates and fee schedule based on current industry standards. The rates will vary depending on the type of products that Sweet Cheeks decides to flow through their cross-dock. I mean, it can be anywhere from dry goods to refrigerated goods to almost anything, actually. So we can expect a potential revenue of tens of thousands of dollars per month based on a fully functioning dock, based on an 8-hour workday, four outbound and inbound loads per hour for the 5 to 6 dock spaces that you currently have. So there is high demand in the immediate area and in the Midwest region. Cincinnati is a hub for large-scale distribution centers and supply chain networks. And last-mile delivery strategies have become a key competitive advantage, so cross-docking can provide that edge. And now I'm going to turn it over to Katy.
All right, thanks, Diane. All right, so in thinking about scheduling and management, to maximize value creation and cross-docking, we need to ensure a continuous flow of goods with a minimal storage time. So Diane mentioned 24-hour turnaround. So the key here, and I'll mention it a lot, is efficiency. How can you be as efficient as possible as you're moving these goods, accepting them and then getting them to where they need to go? So precisely scheduled dock appointments, staff, and equipment to optimize turnaround times and minimize wait times. As Diane mentioned, the industry is growing at a significant rate. Is projected to reach $308 billion by 2030, making this a worthwhile investment. So what kind of skills do we need to implement a program like this? Cross-docking jobs are in high demand. We did a quick search online. We've got 400 positions available in the United States right now, with 20 being added in the last 24 hours. Some of the key skills required including understanding supply chain management, designing efficient facilities, and this is more than just the physical structure of your facility, but the traffic flows within it. managing transportation and inventory, using technology solutions, optimizing your processes, and collaborating effectively with your suppliers, carriers, and customers. These all are essential for maximizing efficiency in your cross-docking operation. And then some things to consider as you schedule. Implementing a real-time tracking with electronic data interchange, or EDI, for smooth transactions. You can also use a dock management software for efficient scheduling. You may want to allocate specific time slots to avoid congestion, having people wait on a dock door. Designing your layouts to optimize traffic flow. Consolidating your orders, making sure that you've got full truckloads going out. And prioritizing critical shipments based on delivery deadlines. All of these help to streamline the process. Some scheduling challenges to consider. It's crucial to manage unforeseen delays, so having a plan in place. This could be delays like weather or traffic disruptions, being able to adapt your schedules to demand fluctuations, and maintain clear communication between your suppliers, carriers, and your cross-dock facility. These strategies help to ensure scheduling and timely deliveries. The good news is you don't have to do it on your own. There is an option to leverage a 3PL or third-party logistics organization. So a 3PL provider like TQL may start with you and have an initial consultation to discuss your logistics, your facility layout. They can then help you create a customized plan. They'll deploy a team to your site and help you with training and integrate some technology into your facility. So this all ensures that you have a smooth and efficient cross-dock process. And now I'm going to pass it on to Liz.
Thank you. Well, I'm kind of the Debbie Downer of the group. Yeah, it's great. There's the potential to make a lot of money per month, which we saw in the data could do a ton and serve a lot more areas. You can lose a lot of money if you're not protected with your contracts and also through insurance. And I'm going to talk a little bit and try not to be too boring about contracts and what you want to think about including. We were obviously tasked with a kind of a hypothetical from you all. We don't have the exact vendors you're going to work with. We don't have the exact types of loads you're going to be dealing with. So obviously, as any smart lawyer would say, we recommend you get a great lawyer and a great insurance broker who can partner with you to make sure that you're protected from liability, that your partners are protected, and that you're only responsible for your own potential negligence and not somebody else's. So the key element in all of this is risk transfer. And risk transfer at its very basic level is making sure that you are only responsible financially for your own negligence. And you want to push any kind of negligence of another party on that party. You want to make sure they have enough insurance in place to pay for any kind of damage. And when we think about the kinds of risks that could exist here, there's a lot. There's damage to the product. There's injury to somebody working. There's injury to trespassers, all kinds of things. There's a huge list of things that could go wrong. Delays in shipment, all kinds of things. Just when we were thinking about having, using another truck, my mind went to, well, you got to think through if you're going to partner with somebody who's responsible for your product in that truck when it's going somewhere else. Who's responsible if they hit another car? This is the world I live in. It's fun. I'm really fun at parties, fun at school events. Don't let your kids ride the bus. There's a lot of places you should go to. But in any event, to the point, some of these are very basic. You want your contracts to identify who's involved, what parties are working, if it's what their roles are, the responsibilities, the scope of the services. This means exactly what they're going to be doing. If there's any kind of special handling instructions or requirements to maintain the integrity of the products, depending on what you're dealing with. Obviously, fees, payment terms. If there's any kind of penalties for late payments. Again, my favorite, liability and insurance. Who's responsible for loss or damage? Again, there's two ways to protect yourself. You have this as your contract, and then you have your own insurance. And you really want to make sure those are the strongest tools when you are dealing with these types of hypothetical opportunities, because you could really get dinged if you're not set up correctly. In the liability insurance, you're often going to see what's called a hold harmless clause. I'm not responsible for anything you do. I'm sure you're familiar with these, but in this situation, I would really make sure you think through how far it could go, right? It's not just maybe the company who's delivering it. They may have 3 or 4 vendors that they're working with. How do all of those insurance contracts interplay? Any kind of performance metrics, if there's incentives or if there's penalties for underperforming, overperforming. Term and termination, that's pretty obvious. How long is the contract going to be? Does it automatically renew? Again, penalties for early termination. Dispute resolution, that just means, again, planning for the worst case scenario. If something goes wrong, are you going to arbitrate it? Are you going to mediate it? If you're going to go to court, you got to pick the jurisdiction. You're probably going to be working with companies that, move all over the country. What jurisdiction is going to control? What's the governing law, so that you're prepared for inevitable disputes that may happen. Again, insurance, so you have your contract, but then you also, maybe you're going to be added as an additional insured to their policy so that you're protected for their negligence. And if you do get sued, you can tender it to them, and it's not your problem. They have to pay for your lawyer. They have to pay for your damages. In the insurance, kind of when you're thinking through what you might require, you want to make sure that they have adequate financial insurance coverage to protect the potential damage to their goods, to injury, whatever kind of risks you might anticipate. You want to make sure their policy that they have is large enough to cover their own risk, because if it's not, then you will be responsible for the rest if there is negligence or some other willful misconduct that triggers a loss for them. Again, it's really crucial to partner with a really good lawyer, a really good insurance agent, to make sure you don't have gaps in your coverage. I mean, I recommend that you probably, as a business anyway, do this every year, just to make sure that when you have events, when you have all of these things, that you have the right coverage for what you're doing to prevent. I mean, you were just talking about someone breaking their ankle and all that. So there's so many times where you want to make sure you're covered so that you don't lose your precious revenue to pay out those types of claims. We did want to finish with just some cross-docking best practices. Again, we did prepare a more robust document that hopefully, we kind of called it that this is part 1 of your endeavor, that it's really more kind of general information. And then once you identify those cross-docking partners, you'll have probably a part 2 where you're more specific into developing the exact procedures in place for those entities. But certainly some of the things that were already mentioned, things like making sure that you have a lot of pre-planning time to schedule where things will go, make sure you have a separate shipping and receiving area. Everything that we saw, that investing in technology it seems like a good idea to have barcode scanners, RFID tags will help improve efficiency, eliminate any kind of manual errors. Dock design and then reducing product touches, both of those, to me, reduce your risks. They help keep your employees safe. They help prevent damage to products. And again, that will help mitigate any kind of financial risk you might absorb from this. Clear supplier coordination is essential to ensure accurate deliveries. Same with scheduling. Most of these are pretty obvious, and we think too the most important. This is going to be a process, and you're going to continually improve, hopefully. And I'd solicit feedback and from your employees, from the vendors that you work with, so that you can constantly continue to improve your processes. Again, we think this is part 1, and we think it's a great opportunity. It looks like the Midwest is a perfect spot for this. I don't want to scare you away. It's going to be great. But yeah, if you have any questions, let us know. But yeah, I think we're pretty much done. Yeah.
So we did a calculation based on standard rates that would apply to this area and based on a fully functioning dock with the 5 to 6 dock spaces that we went to go see. It was around $50,000 to $60,000 per month of revenue, but you would also have to, minus the initial investment and, paying the staff. So it's a great opportunity. Okay, thank you.